cohort in the region immediately surrounding Kansas City, which includes Kansas, Missouri, Nebraska, and Iowa. We call it the Heartland for short. I'm so pleased to be here to talk about what is a really rich and wonderful space of women in leading roles in venture capital around the country with all of you today. And I don't want to take any more time before we get to introductions from our panelists. I'm going to ask each of our panelists to introduce themselves in 90 seconds or less so we can get right into the meat of the conversation. And I'm going to let the privilege of the first introduction go to our other Melissa Bradley. Take it away.
Well, thank you very much. I'll take that precedent as the person on one of the people on the East Coast. My name is Melissa Bradley. I'm based in Washington, D.C. I wear multiple roles, but I think most important, I'm married to an amazing woman and have 6 children. I am also the founder and managing partner of 1863, which is an accelerator that also has a fund attached to it that provides debt and equity financing. I'm also co-founder of Ureeka, and probably most importantly, a great fan of Nora May and an investor in Portfolio and an advisory board member to Black VC with my friend Leyla.
Excellent. Leyla, why don't you tell us about yourself?
Hi, I'm Leyla Seka. I was a software executive for 25 years. I spent the last 12 years, 2 years ago at Salesforce. I built the App Exchange, ran a number of different other product lines there as well. I was one of the 2 women that went to Mark Benioff and said, you're not paying the women the same as the men. 2 years ago, I left Salesforce and joined my partner, Malin Yen, at a fund we put together called Operator Collective, $50 million fund. We invest in enterprise B2B tech. The most interesting thing about our fund is our LP base, over 130 operator LPs as well as institutionals, but those operator LPs are 90% women, 40% people of color. Our thesis was if we can change who's investing, we'll change the way the landscape looks. I'm also co-founder of Black Venture Institute, which Melissa mentioned, which is a program we put together last year to help bring more Black operators into investing.
Excellent. Thanks, Leyla. Nora May, take it away.
Yeah, what an incredible group. Nora May, based in Los Angeles, also a fan of Melissa. So I want to send the love right back to her. I'm an engineer turned venture capitalist. I spent my first decade or so in the aerospace industry and then got into venture, co-founded a firm here in Los Angeles called Mila Capital, investing in early stage hardware, manufacturing, and logistics. And I'm now building up a firm to invest at the intersection of food, culture, and tech called Supply Chain Capital. I am a venture partner with Portfolio's Rising America Fund, which was a pre-2020 diversity-focused fund, and we're very proud of that. And I love this space. I'm grateful to be here.
Great. Samara.
Hi, everyone. My name is Samar Mejia Hernandez, and I'm excited to be with these great group of women. I founded Chingona Ventures. Chingona means badass woman in Spanish from Mexico, and I'm investing in badass founders at the earliest stages. So I'm mainly pre-seed, where I like to write the first institutional check before anybody else. And prior to this, I was in venture capital at another early stage venture fund, and I started my career at Goldman Sachs. So I was there for nearly a decade, investing in the public markets and before moving to the private markets. And I'm also an engineer by training, and I'm a Mexican immigrant and a mom to 1 toddler, which is enough. So I don't know how you do it with so many kids, but happy to be here and excited to share more about our backgrounds.
Excellent. And Shelley, take it away.
Thank you, Melissa. Hi, guys. I'm Shelley Kapoor Collins. I founded the Shatter Fund, and we invest exclusively in technology companies that are led and founded by female entrepreneurs. Prior to founding Shatter, I started my career as a programmer. So I'm a programmer, techie, who spent 10 years at Oracle in corporate America and then went on to political tech, was an advisor to then Attorney General Kamala Harris's campaign and on her transition team as a tech advisor before going into the in the second Obama administration on the President's Council for Women in Business. And that's where I really dug into, like, what does it take for women to start businesses? And that's how Shatter came about. This past March, we also announced the launch of the Shatter Foundation, which through which we are not only investing in the pipeline of women today, but we're building the pipeline of future innovators by bringing entrepreneurship to girls in underserved communities. So thanks for having me here.
Excellent. Thanks, all of you. And I'm so excited to be here with such a distinguished panel. First, I think the concept of lived experience comes to mind for me because I think we've all heard the stats about venture capital and about what does a successful founder typically look like. But all of our unique lived experiences bring us to the place where we are today, and the ability that we have today to have an impact. So thinking back for each of you on your own lived experience and the unique combination of personal and professional background, how has that really informed how you approach your work as an investor today, and the kinds of deals that you look for?
I can start, Melissa, and I'll start with $10. When I was in high school, I specifically remember feeling or thinking that if I could get a job making $10 an hour in an air-conditioned office, my life would be okay. I was born in Mexico, raised here in Los Angeles, first in my family to go to college. And so the expectations or the size of that world of possibility was pretty small. Now, I was lucky to have been tapped on the shoulder and introduced to engineering, and studying mechanical engineering truly changed my life. When I was at MIT, I met 4 other women who had been similarly tapped on the shoulder. And so many years after graduating, we got together and co-founded the Latinas in STEM Foundation and did work in the community to extend this eye-opening experience to other young women. And so for me, that was a daily reminder that I need to look for those kids who want $10 an hour, but can do so much more. That's the aspect of my lived experience that I carry with me every single day. On the professional side, I mentioned I was in the aerospace business. Post business school, my job was to work with a team to prevent SpaceX from taking our business. And the team was very inherently proud, and they thought, space is hard. These guys have no idea what they're doing. They'll never get there. And so I found myself really wanting to be on the other team and thinking, gosh, I want to work for the other guys. I want to think, heck yeah, this is possible. I want to beat the incumbent. And so that's another experience I keep front and center, and reminding myself that the little guys do have a chance, and that if you're hungry enough, you can most certainly get there, even if it is hard.
Melissa, I'll jump in after Norma. That, I would say your story, Norma, is about the $10, and mine started, when I was 5. So, my parents immigrated from India, and in an Indian household, if you know anything about Indian households, you have 3 options in terms of careers. You're a doctor, you're a lawyer, or you're an engineer. So, my introduction to STEM was at the age of 5. My mom used to do the multiplication tables with me, and, it was something, it's all they knew. And without even realizing it, they were being so deliberate about exposing me and my brother to the world of tech and engineering and math. And so it was, I think it's just having that degree in information systems and then the master's, that career in technology kind of became the gateway for everything I did, from corporate to political to venture. And I say all that to say that technology is the greatest equalizer of the 21st century, but it doesn't make sense to me that there are not enough women in tech. And so that is the focus that I bring to my investor lens, where I look for companies that are started by women that are technology focused, not tech enabled, but true use of technology to solve a problem.
And I guess since we're going down the immigrant and STEM route, let me just chime in, because my background is similar to that. So I was also born in Mexico. I moved to the US at a young age. And you can't tell by my lack of accent, but I didn't pick up English as quickly, but I picked up math really, really quickly. And I remember being behind in ESL classes, but I would do my multiplication tables very quickly. And I was done before anybody else in the class, and I'm like, what did I do wrong? Is there something wrong? And my teacher kept giving me more homework to do and sending me with a letter home in English, and my mom couldn't read it. And so I just thought I was doing something bad. But it turns out she was giving me more advanced homework, and that's what led me to eventually study engineering and to, do STEM as a career. But I grew up in a dual language, multicultural, low income household. This is what, 99% of the population is. Venture capital is not. And so when I have a company that comes in for an investment opportunity, it doesn't have to be impact. Sometimes it is, but they're targeting the 99% of the population. It's a very different lens that I can understand, that many of us can understand, being a woman, being a mother, being an immigrant, being Latina, right? And so there's all these boxes that you check that are not traditional in venture. And I believe that provides us with a unique edge to look at a deal and to look at a business that's in a growing, overlooked market. And I think that's our competitive edge.
Almost feel like a slacker because I've only come to appreciate math later on, because all the other stuff I was learning at school, I was like, that sounds like BS, but at least I know 2 + 2 is always 4 and 3 × 3 is always 9. I came to this, I think, similar. I was sitting while everybody was talking because I wasn't familiar with everybody's story. But I was like, I wonder if this would be happening if there was a bunch of white men on this call of all these naysayers and challenges. Mine was born out of being on the demand side of capital. I started a company a year after I graduated from Georgetown. And I moonlighted on my full-time job to create the company, and they were fully aware. And when I went to the SBA to get a loan, the woman said to me, we can't give you a loan because you have 3 strikes against you. And I was like, okay, well, that's good. It's not 100 red marks, it's 3 strikes. But she said I was a woman, I was Black, and she didn't know any successful Black women in financial services. And luckily I departed quickly and went downstairs. But I said, if I ever got to a point that I was successful, or I actually could figure out what does that mean to be an investor from a venture capital, because I was headed toward investment banking, I would do so. And as soon as I sold my first company, I became an angel investor with this idea of not letting it happen again. And I think it has evolved to now be, for better or for worse, a full-on venture capitalist, so to speak, but less around the tech, more around filling a need and a gap. Less than 20% of all Black founders are tech companies. And so while there's tons of tech founders out there, and I know Nora May, I love the food piece, I got some folks for you, but as everybody's floating toward tech, they're missing 80% of the swath of entrepreneurs who look like me. So the intentionality has always been around investing in those businesses that are focused on job creation, that represent historical businesses in our community, that we try to make and help them become tech enabled so they can be sustainable and scalable in the future.
Okay, I'll go too. So I was not into STEM. My parents are immigrants. Okay, I'm first generation, so I do have that one. I'm in there with you guys. I was not into STEM. I got into tech because when I got back from this is my hometown. San Francisco is my hometown. It's where I grew up. So like my whole family, this is where I live. And when I got back from Peace Corps, the internet happened, and everyone was like tech jobs. So that's how it happened. I mean, no magic there. But I worked really hard, and I was an operator for a long time. And what I did see consistently, and I'll just use Salesforce as the last example, we started buying a lot of companies, and we'd buy these companies, and these white male founders would come into the company. They'd stay 2 years, get their money, leave, go become venture capitalists, call all the white male executives inside Salesforce and be like, join my angel fund, join my fund, angel invest, do this, advise that, and no one was calling me. And then I started getting mad because with me, pay equity is always like, if we don't have the money, at least in this country, we're going to have trouble getting the power, right? That's pretty, so I'm always looking to make the money flow a little bit more evenly to all groups, not just the white men that sort of run the show. So for me, venture became another area where there was income inequality. And then I met up with my partner, Malin, and the approach to solving the problem made so much sense. And it's worth noting, like the LPs in my fund are all ballers. I mean, really like the people you want to go talk about building your company with. And right before we launched the fund, I did like a survey of all of them. And 70% of them said they'd never invested before. And then I asked why, and they said, what do I do? How? Do I go to Sand Hill Road with a checkbook and try to like, guess, what do you do, right? So access, language, knowledge, vernacular, once that is given to people, they will run in and take their share. But if you never open the gate, no one ever gets in. And as far as investing, look, I built the app exchange. I've seen every single enterprise app that's come online in the last 12 years. I invest in tech. I don't really care who the founder is, but I will say this, I'm intentional. I'm not just investing in white men. And if I feel like it's going too far that way, we start adjusting. So I am intentional, but the fund is very money oriented.
Return.
That's not a bad thing.
Well, this is great. I mean, I'm just so inspired hearing all of these personal stories from each of you and hearing how you got to where you are today. I learned something, and Norma and I have something in common. We both have gone to MIT, and I've neglected to mention I'm an MIT EMBA, so shout out to that program. But that's one of those great institutions in the world where you get to be around a lot of wonderful entrepreneurs, makes a huge impact on the economy. And it's also something where I think you start to get more opportunities if you are associated with a brand like that. That system that people use to make judgment calls based on the kinds of people that they have seen have success in the past is called pattern matching. And it is really something that is synonymous with venture investment. And frankly, it's how we've gotten to the present state of play, where less than 3% of VC funding goes to women-led startups. Only 1% of VC-backed founders are Black, and less than 2% are Latina. So in what ways do you all see pattern matching pressure show up in your work as investors, and how do you work to interrupt that system and the biases that are inherent in it?
I will say, luckily, I don't feel that pressure. And I think partly because our investment thesis is really around helping what we call new majority entrepreneurs. So all of our LPs are very clear. We are from the get-go seeking to break that pattern matching cycle. But I will say this, I think pattern matching is clearly used for good and for bad, right? I think scientists use pattern matching to do good things. And I say for us, pattern matching has been helpful in understanding what makes a good business run by an entrepreneur of color. Are they picking a sector that resonates with the communities that they so desire? And do we see it scalable over the next 3 to 5 years? Do we have folks that have some level of business experience, maybe even worked in corporate America before? Do we have folks that are committed to jobs? Because I think it helps us, right? I want to be honest that pattern recognition to some extent is useful because our job as GPs is to return money to our LPs. I don't think anybody on this phone, this Zoom, sorry, is doing this for charity, although we would love to, but we're not. And so I do think that there is an element of pattern recognition around how do we use data to drive better decisions that will generate a return while still delivering that impact. So at least for myself, I would imagine for others, the pattern matching is actually a value add in terms of our ability to narrow who we're investing in, because we, in many cases, have created our investment thesis.
Yeah, and do you want to go, Norma, or? Yeah, so one of the things I like that piece of the pattern matching, and like there is some good to that in that it's everyone has biases, everyone does it. It's not necessarily a wrong thing. It's just that the same types of people have been investing and they have very similar biases, and that's why we have the same types of founders getting backed. And this is exactly why I created my fund, because I kept seeing the same types of founders getting backed and they all had resources, a network, even the language, right? They got asked different questions. There's tons of research on this. So when I created my fund, I knew that I was going to have, if I saw a Latina from University of Michigan, engineer, whatever it is, like I would have probably geared more towards her and try to understand her business in a different way. And we don't exclusively invest in Latinos. We don't exclusively invest in women and minorities. So I wanted to, and my team is not only one, has one background. So from a process perspective, I've tried, and it's not perfect, but I'm constantly refining it, is from how they hear about us to how they get through the door to how we assess them to how they get into the portfolio. I've tried to create structure and framework around assessing this. And actually one of my interns just ended up writing an article about this because we were looking at a company that was in the femtech space. He's like, oh, I don't think I can look at this. I don't know anything about hormones, hormonal health. And I was like, well, you don't have to. You can actually look at this and use our framework. And so we have a framework and how we look at every single company. And I'll share it now. It's public. Anybody can see it. But every single deal, whether it's femtech, whether it's developer tools, it goes to the same kind of filter, right? The way founders find us, we take all warm and cold intros the same exact way. We ask the same exact questions at the risk of sounding, too robotic. But in the beginning, we want to make sure we ask very similar questions to both men and women in all different industries, and then check ourselves on biases. So I encouraged my team to talk about this. So in one case, one of my associates was like, I just realized I had this bias that this person was a lot older. And I just, in my head, thought maybe they can't build a business. Maybe they're not hungry enough. And we looked into the data. And of course, it says like the people that have built the most successful unicorns or whatever else are over the age of 40. And so we encourage that discussion internally and use data to back up what our thought process and our biases are, and then also creating a framework on how to assess a deal to try to remove as much biases in the beginning.
I love that. So I would say a few things. Networks are key in this as we talk about bias and who we're investing in. So having an outbound marketing strategy and networks that are different from the typical pool is important. I'll have to say that when I went out and started fundraising and heard pedigree was important and pattern matching was important, I thought, okay, I have 3 degrees from MIT. This is going to be a breeze. And it hasn't been, because that barrier may have gone away, but other barriers came in. I think there's a lot of dialogue around bias also at the fund manager level, because research has shown that the biggest way you can alter who gets funded is by changing who the capital allocators are, right? So having more people like us in charge of deciding who gets capital and who doesn't. And so the Gender Smart Initiative has a team working on the due diligence questionnaire version 2.0 that can eliminate some of the bias and some of the procedural barriers to capital for emerging fund managers. And so thinking about process, I love Samar's comments, because that can really help, not only upstream in determining whose fund gets funded, but also as we execute our own process.
I guess I can add to that the worst pattern matching phrase I keep hearing over and over again is, we are the Uber of, right? Like, you don't need to be the Uber of anything. You can just, you don't need to pattern match on the company. So if it smells like Uber, it looks like Uber, it runs like Uber, sounds like it, you're going to be wildly successful. So that's one thing that we try to stay away from. My team and I are very focused on how we're disrupting that, that pattern matching is truly by focusing on the founder. The founder is everything, especially the female founder. And when you look at the women of color within that founder base who are getting even less capital, I think is 2%, 1% to the 3% that's going to women overall. Like, that is where we feel like it's not pattern matching, but we really need to focus on getting them into the pipeline, putting an objective process around their ability to connect with the fund, to present whatever idea they have, whether it's seed or MVP. And from there, we are the firm believers that there's a direct link between diversity and innovation, which leads to greater returns. And so that is how we want to return to our LPs, is by focusing on those founders. So I think the founder is the key. Any way you look at it, the founder, and not just the founder, the co-founder, the early team, but then being able to go out and help them establish the rest of their team based on what their needs are. That is the key, I believe, to disrupting this.
I just say I'm very deliberate, right? Deliberate in everything, and we track everything. I'm constantly looking at data. I'm constantly trying to understand what's going on, and paying attention. And look, when we were raising our fund, Malin and I could have raised an Asian white lady fund all day long, no problem, right? And at one point, there were just not enough Black LPs. And you know what we did? We went to our Black LPs and asked them to help us find more. And we did. Like networks, to Nora May's point. You don't have them, go get them. Or like what we did with Black Venture Institute, go build them, right? Create them, make them, we are all there. You can do a lot more than you think you can to change venture. And people are willing, slightly terrified, great, go give them an idea they can chew on, and then they'll get going. But, it's up to us.
Great. I think those are some amazing thoughts. I also am so encouraged by the robust discussion in the chat. And I just want to remind everyone, if you have a question for the panelists, you're going to get an opportunity to ask that soon. Go ahead and drop that in the Q&A so that we can start thinking those through. And in the meantime, I've got 1 or 2 more questions for the panelists, but I'm going to need all of your help. So go ahead, drop your question in the chat. So really, I'm going to hit on a couple of points that each of you brought up in your comments. There's so much discussion about the lack of diversity in the investment community itself. And in addition to the lack of gender, racial, and ethnic diversity in the investment community at large, 58% of venture investors in 2018 were white men. There also seems to be great evidence in the lack of diversity of thought. So nearly 40% of investors in 2018 in that same study went to the same two schools, Harvard and Stanford. And so we're here today as a group of people who have gained success outside of that model. And given that, what is a piece of advice you might offer to those who want to build a career in investment and bring a different perspective or a different lived experience to that role?
I would have to say, and I'm going to jump right in, that my advice to them is you absolutely have to do it. Look, if you look at, and it's not going to be easy. That's the other part of it. It's not going to be easy. You have to do it, and you have to find the way to do it. And the reason I say that is if you look at the roots of venture capital and some of the most storied VC firms in Silicon Valley, there, you have white men at the helm of those firms. And then what happens is, men give to other men who look like them. They raise from other men who look like them. They invest in those men. And so that familiarity breeds connection. And actually it's called homophily, that there's actually a term for it. And so people that look like this Zoom or this panel are less likely to be able to break into that crowd unless, like Leyla is saying, you're very deliberate. So we have to be deliberate about it. But even more than that, I think that, even if your path is nonlinear, you have to be able to take that path to get into venture capital. Otherwise, it's going to continue the way that it has been.
I would say there's lots of ways to invest. So we all went into venture capital, but one thing that I was very struck by was operating executives who were making money and putting it in the bank, or keeping it in E-Trade. So getting the money out, it's a gamble, so you have to be careful and be prudent, but getting the money out tends to make more money. So that's why Black Venture Institute, I'm going to keep talking about this because it's the best thing that's ever happened, but Black Venture Institute essentially was that. It's a 2-week program to demystify venture, meet all the players, and out of that, we have people going into venture. We also have people just writing angel checks and starting to familiarize themselves with what this is and that they can deploy their money this way. So, even if you can't full on run over into venture right now, or you want to noodle on it, you can begin investing if, with people that you trust and in good situations. But there's lots of ways to think about getting into this would be my way, my word.
I would say just do a gut check. I mean, I see a lot of new funds coming online, and God bless them. This is my second time being a fund manager. And let me just say, there is nothing sexy, glamorous. There are moments of joy, but it's not consistently joyful about this. And so it seems to be the sexiest job to have right now, but I clearly missed that part of my job description. But I think you really got to know what you're getting into. And I remember when I started my first business, my claim to fame was, I want to be on my own. I don't like taking orders. Well, how stupid was I? Because that's all you do is take orders from your customers and your board members. So all you do as a VC is try to keep your LPs happy and keep your entrepreneurs on track. And so I think the best advice I can say is just make sure you're ready. I'm with Leyla. I started as an angel investor and really got comfortable with that. And I did that on my own. I'm happy. I'm now part of Portfolio. So I think first is figure out what do you really want out of this and how much time do you have to give, because it is all time consuming. There is just not time because you just are constantly monitoring your company. So I think first do a gut check with yourself of why are you really interested, particularly in VC, and what do you want out of it? The second thing is get your feet wet. I would say definitely start with angel investing. If you don't have an ulcer, you may get one. If you sleep well, you'll probably stop sleeping well because you are essentially managing other people's money. And I think the final thing is, and really be clear, what is it that you're contributing? I think respectfully, we don't need any more copy and paste VCs with white men mentality investing in diverse founders. Like that is the last thing that we need. And so I think really thinking about, as if you're an entrepreneur, what's your competitive advantage in a space, because you do have to raise money for it. And I'm happy to see all the new faces, but it's getting harder and harder to really figure out what's your competitive advantage and where do you sit in that capital stack to be meaningful to a set of LPs.
Yeah, I always believed there would be a little bit of consolidation in the micro VC space, but who knows? It may be coming later. So let's say that you get through all these hurdles, and despite Melissa's best attempt at telling you that being a fund manager sucks a lot of the time, let's say you find that you still have this incredible niche and access to opportunities. I would say building the GP community would be my best piece of advice. You know, whether this is the Transact community of female fund managers, or a specialized boot camp for emerging fund managers, whatever it is, whatever that cohort of GPs you can share, you know, laughs and tears with. That has been key for me, to be able to reach out and send a quick text and ask, how do you do this? Have you faced why? What was your interaction with so-and-so? I found that to be incredibly helpful, especially when things are not going so peachy and fun and sexy.
Excellent. Well, I'm going to go ahead and take some license and combine a couple of different questions I'm seeing here in the chat and the Q&A. This is great. So folks, keep dropping your suggestions in. One of the questions asked, you know, for those of us who maybe don't want to be a VC, but want to continue to be helpful to companies, to cheerlead and to add value to companies, what are some other ways that they can be involved in supporting startups?
So I think there's lots of ways. We welcome people as informal advisors to entrepreneurs in our portfolio on the fund side. And certainly on the accelerator side, we are always looking for coaches and mentors. Coaches have a slightly deeper engagement. Mentors are more subject or sector specific. But I think, you know, one time I said, like, there's no I in entrepreneurship. And so it is a team sport. So I think if you find that you have a passion and you believe you have something to give, I guarantee you, even beyond this group, there are tons of organizations that will be willing to take you on. Because the one thing we don't often have, particularly as a VC, is enough margin to be able to pay all the people we really need to help our entrepreneurs. So always looking for that kind of coaching and mentoring. I would say though, before you like launch into it, start with a couple. Because I think it's, I hate to be the naysayer, but it takes time. It's a process. You know, oftentimes entrepreneurs are running very quickly. And so there is an art to be able to coach entrepreneurs, to give them the information they need in the moment, to not try to tell them what's going to happen 6 months down the road, because that is not their focus. And so I do say, you know, be mindful that you don't get frustrated and they don't get frustrated before you go all in.
Excellent. So another question from the chat really kind of dives in even deeper on this question of the bias that fund managers experience. So have you found that institutional LPs or have bias for or against emerging fund managers? And how have you navigated this when discussing your track record, especially in the early years of raising a fund?
So yes, is the short answer. And it's interesting because I know, like, on Twitter and kind of other places, people are like, they say all this crazy stuff about VCs and all their bad experiences with VCs, but many times, you know, we have to raise funds too, and emerging managers get a lot of the same experiences as some founders, but we can't necessarily talk about it publicly, or you know, so that's where the GP community is great. But yes, look, when I started my fund, this was 2 years ago. This was before some of the like rolling fund structures, some of the new structures where you can advertise publicly and you can build a Twitter following and, you know, recruit from there. And I didn't have a huge high net worth network. I still don't. And so I had to go to institutions to seed my first fund. And the one that I did get seed funding from in my first fund was one that was light years ahead of its time. So before any initiatives, they were looking to invest in a first-time fund manager with my strategy, which was like a unicorn. And I went out to actually create an angel group. I wasn't new to venture. I had 5 years of venture experience. I had deal flow. I had enough data points where I was like, if this company if I would have invested in them at this point, they would have exited. They would have, you know, kind of just runs of funding, whatever else. And so I went to them with this, but there was still like an 18-month plus period where they did a ton of diligence on me at my last fund. They talked to founders that I would have invested in if I had the money. And so they talked to potential investors. They did a whole thing. And that allowed me to get my first fund off the ground, and that allowed me to get, the next fund off the ground. So we experience a lot of that. We experience ghosting. I think I get asked, and I'd love to hear everybody else's perspective, but I saw somewhere that I think we get diligenced even more than anybody else. Like every single one of our portfolio companies, I got, people that used to work for me 5 years ago got a call. I didn't even put them on my diligence list. We get asked to, I'm not an impact fund, a traditional impact fund, but we get asked to track certain things and certain metrics, which I do anyway, many times, but there's extra levels of traction and recording that you have to do. And they also like to sometimes put you in a bucket. So like, oh, you only invest in women and minorities, right? And oh, if you don't, then we're not a fit. And the last thing I will say is that also, we like to invest in all different things, and we come from different backgrounds, but being a Midwest fund in Chicago, it's outside of the Valley. I didn't go to Harvard or Stanford either. And so there's kind of that level of bias. But I will say this, there's a lot of newer type of LPs coming to market. As we mentioned, there's a lot more women, there's Latina, there's Black, they're all sort of women, minorities are coming in wanting to invest. I'm very grateful for that. There's institutions that are starting to invest in emerging fund managers that are very different from before. And so I'm very grateful for that. PayPal Ventures, I gave a shout out earlier, but they were the first to commit in my fund too before anybody else. They didn't ask who else was in the fund, didn't ask any of that. And their process was transparent, quick, and you could apply online, right? You didn't need like 10 people to make a warm intro for you. So for me, when I talk to LPs and they're kind of building out their program, I always give that advice. It's just like, if you want more emerging fund managers that look differently, you have to not ask for warm intros. You can't, you have to look at the track record in a very different way, be transparent, have open communication, and then know that, this might be a different type of assessment that you'll look at, different type of pattern matching than you would your traditional funds.
Let me just say, I am so glad that Samara had that experience. Data point, post George Floyd, not a single Black woman has successfully closed her fund. They have raised, but they're not closed. Keisha Cash closed her before George Floyd. So I think we also have to understand that there is bias amongst the diverse communities. So as a Black woman, people like Monique, who's been doing this forever, Monique from Cake Ventures, Monique from Rain Ventures, we can't get across the finish line. So I want to say, shout out that there are those that can, but there's still nuances around bias of who is showing up at the door and what people.
Absolutely. Norma, did you want to add something?
Yeah, and if you've heard Rain Ventures pitch, I mean, they have an incredible IRR metric, and it doesn't seem to matter. I was going to add data points. I've now been in the venture ecosystem for 6 years. Between my previous firm, my venture partner role at Portfolio, and Angel Investments, my business partner and I have, we're at over 40 investments. And the feedback we continue to get from institutional investors is, yeah, but you haven't done it together. Yeah, but those investments were really small. And we're like, yeah, because that's the capital we had access to. And so we know that we were leaving opportunity on the table by not being able to take our pro rata, by not being able to write a bigger check. And so we're bringing all those lessons learned into this model. And so I think that dialogue has certainly emerged. And I have had a few institutions who have said, listen, we have limited capacity for emerging funds or female-led funds, and there's pressure to get it right. And so our LPs are they're giving us extra anxiety over this process, which is why we have added diligence, because if we don't get it right, we're not going to be able to continue to invest in women and underrepresented fund managers. And I'm like, it's an interesting test. I was grateful to have the candid feedback because I certainly had a sense that the bar was higher, but it doesn't signal that this is an evolved way of doing business. It signals that they've got to check a box. And it's not all, clearly it's not all institutional investors, but it has come up.
If I may, I'm sorry, but I think that's one of the reasons why, since you sit at Kauffman, the Capital Access Lab that you all started, right, which was intentionally looking at not just diverse GPs, but also diverse investment thesis beyond just traditional venture capital, was so important. And so I do think that these challenges that I had, Norma, and maybe others, can be overcome if somebody is willing to provide a signal effect to the industry. And I think Kauffman and Rockefeller together did that. I think PayPal is doing that. I think there are lots of others who are beginning to do that. So my hope is 12 to 18 months from now, this is a very different conversation, I hope.
Absolutely. Thank you for spotlighting that. Yeah, for those of you who are not aware, the Capital Access Lab is a project that we started at the foundation about 2 or 3 years ago to invest in founders, in both funds who are investing in founders of color and funds that are led by GPs of color. And so that has been a really incredible journey for us as an institutional investor to think, about our own capital. And I'm gonna follow on that theme for each of you, because I think these conversations are so interesting because you both are raising money, of course, from LPs, and you're deploying capital as an investor, and so you're in a very unique place to have empathy with the founders that you're working with. So where do you see some of the most interesting innovations or industry changes happening in this world post-COVID? And what advice do you have for the founders that are coming to you right now in kind of integrating that feedback into their ventures?
So one of the coolest things I've seen is founders really coming into and exercising their right to choose. I've worked with a slew of founders in the last 12 months who have said, I want to work with you and you, but not with you. I had an anchor investor. I'm gonna tell them never mind, because I'm more values aligned with you and what you bring to the table. And I think that's an incredible shift. I think I've tweeted this before, so I'm happy to say it again. I think that top tier VC firms will continue to actually lose out on early stage allocations, because founders will say, I want to work with these micro VCs instead because they're better aligned with who I am and where I want to go. And we're seeing that even in later stages where founders are creating allocations for underrepresented investors to join the cap table pre-IPO. And so I think that's an exciting change in venture. It will create more opportunities for micro VCs, and founders, again, they're coming into that power and that voice, which is so amazing to see.
I think it's a little bit games up, right? After George Floyd was murdered last year and the country realized it was racist, Silicon Valley realized it was racist, and venture capital realized it was racist, and now everyone's like, got to do something about this now. So I think a lot of what everyone said, as far as people saying they're trying to do it and then creating unnecessary hurdles for all of us to climb over, is very real. And as a white person, I get a little less of it, quite frankly, if we're going to be totally honest. I don't get as much as I'm sure all of you do, and I own that. But I do feel like game's up. And there's a lot of money to be made. And COVID, like for what I invest in, COVID was great. I mean, it's a terrible thing to say about such a terrible thing that ravaged everyone's lives and so many people died from, but enterprise cloud technology, COVID, all of the things that were keeping people from having one server on the side ended in COVID because no one was in the office. So it's been a real uptick. So there's a lot of money to be made as well, which is why thinking about how you get some of yours in there is not a bad thing to do.
I would say less about helping VCs. I would say I think entrepreneurs with COVID have become much more savvy on understanding. I think we got a little weirded out with VC and all these TV shows that cash was a subsidy. And I think people realize like cash is queen, and then not everybody needs venture capital. I think particularly for the entrepreneurs I see, they got tired of being told no. They realized forget that, maybe be polite with my words, and figured out how to roll up their sleeves and focus on generating revenue, not getting subsidy for growth. And I think that's a real pivot that we are beginning to see a lot more companies that are revenue generating and have a clear pathway to, I'd say, above average profitability within their respective sectors than saying, hey, I got an idea, can you write me, here it is on a napkin and write me a check. I think the second thing is that entrepreneurs have gotten really clear on how to better use social capital. I think that, whether for good or bad, we're all in Zoom, we're not traveling as much. People have figured out how to tap into communities, how to, I would imagine, reach out to all of us and just have really meaningful, substantial conversations. And I think for some, that's actually changed the tide of what does this investment process mean. I don't know how it's going to change when we all start getting on planes again, but whether my peer VCs agree with my investment thesis or not, I have heard them sound slightly more compassionate around their diligence process and spending time with entrepreneurs. It's no more speed dating, but really trying to get under the hood. I think some of that is pressure on returns as some of these funds get older. And let's be clear, how many more tech companies can go public with no money? And I also just think that they have caught on to Layla's point post George Floyd, that I like to believe in their own education process, they're spending more time with entrepreneurs and not rushing. And I think that's been really successful because entrepreneurs are well prepared beyond the 3-minute stuff we see on Shark Tank. They know their stuff and they need the opportunity to do that.
That's great. And I think that's a great segue to another question that we have in the chat from Rafaela. She asked, do you think the diligence process is different in women-led funds? And if so, how do you make sure the process is timely, thorough, and authentic?
We make a decision in 14 days or less.
Wow. That's pretty amazing.
Yeah, we have a team and we're very clear about what to supply. We do an initial phone call. We decide what our pathway is. The 3 of us get on the phone and make those calls and we make a decision. Now that's not terms, but that is, we make a decision. Yes, we're in, or no, we're not. And I think respectfully, that's probably the best thing that we've done, because we hear from folks, when I show up as a female or I show up as an entrepreneur of color, they already tell me it's going to take 6 to 9 months. Well, we all know the deals get done in 6 days. So I think for us, transparency of process and getting to a quick no, if that's what it means, quickly. And then if we do get to a no, saying, but here's some other options for you. So I think that's really been our focus, because we understand that while there's lots of social capital, if you're like me, I didn't know any investors or any CEOs until I sold my company, which was clearly too late from that perspective of fundraising. And so I think we've approached it, that we want our meaningful interactions to yield some positive outcome, even if it does not include our own financial investment.
Yeah, I have my same thing. I have my process on my website, and everyone's very clear about what steps you're in, what questions you're going to get asked. We any submission within 48 hours, we respond back, yes, we're going to take a meeting, and then within a week, we're not maybe as quick as you, Melissa, but we'll respond back and say yes or no, and a clear articulation of why. And the more time we spend with the founder, the more feedback we have. But the big thing for us was transparency, to the point around, we don't want to drag you along. We don't want to, not have that, because women and minorities experience that even more. Not everyone's happy with the response. Obviously, we say no 99% of the time, but at least you get a response, and you'd be surprised at the number of responses we get, like, thank you for responding, or wow, thank you. Even if we say no, thank you for that, because they don't get that. And so I'm fully on board with the transparency.
Mm-hmm. Well, I'm going to go ahead and, as the moderator, take the privilege of the final question. And in doing that, I would really like each of you to think about the other wonderful women that there are in this space and hold up an example. So share a story of another woman who is a founder or an investor that you look to for inspiration, or that you have learned from over the past few years.
I would start with that. I would say, well, there's 2 people for me, but I'll highlight my good friend Karen King. She's general counsel, or she's the chief legal officer for Silver Lake, and she was really instrumental. She's on our board. She and Jenny Johnson both are Franklin Templeton on our board, and they were both extremely instrumental, not only in mentoring me and guiding me, but in investing in Shatter, bringing in other LPs, seeing the need for it, and they just they really took me under their wing. And I think that even though I'd been angel investing, I had the connection, I had this amazing network, I was an operator. It still took that kind of wattage and power to really get the fund off the ground. So I think that they're amazing mentors and investors, by the way.
There's another female VC I greatly admire, Miriam Rivera at Ulu Ventures. She's also my Kauffman Fellows mentor. Miriam is a first generation college grad from Chicago who ended up going to Stanford and earning a ton of degrees. Has endowed a scholarship for low income and undocumented students at Stanford, and just raised I think fund 3 at over 100 million, oversubscribed, the highest AUM for a Latina VC to date. And she is anxious to have others strip her of that title. I know that. But truly have been following her work in the space, and she's definitely someone to watch.
Great. Also worth noting, a board member of the Kauffman Foundation. So shout out to Miriam.
I'm going to do 2 quick ones. One is Leyla. She has been a true badass, and I would say has been very clear about her privilege as a white woman, leveraging the race, but understanding the relationship she had around gender and just knocking down doors. The other person, Norma mentioned, which is Monique Mosley, put up her own money, put up $50 million of her own money to start a fund, still can't close a second fund, but most importantly, really good friend, amazing person. And if you haven't seen Undercover Billionaire, she killed it by being dropped in Tacoma, Washington, and got her $1 million plus valuation. And so just really good person, clearly very fashion forward, and just talented, but like one of the sweetest, most down to earth people that will help anybody. And I would say that's the unique part about being a female in this industry. Men will say they'll help you, and maybe they will, maybe they won't. There's competition. I don't even know all these women, but if anybody in this call ever calls me, I'm going to take your call. I'm going to respond to your email. There is no competition. I need more people who look like me and many more women. And I saw some comments around LGBTQ. I need more of us. So I think that there is just a sense of community that doesn't exist in the traditional VC space.
I'll go next. I'm going to do 2. Oh, sorry. Do you want to go?
No, go ahead. Go ahead.
So I'm going to do Melissa back, right? Because first of all, I do step into territory as a white woman that is not really territory I belong in sometimes. And I need help not to make mistakes and guidance when I do. And Melissa has been that person for me. That's why she's on the board of Black Venture Institute. And she continues to explain to me how the world's really working, which I am continually grateful for. So I'll say that. The other one for me is my partner, Malin, but I'm not going to do that because that's too ridiculous. But Frida Kapoor. She's been doing this a long time. She is really smart. She's challenging. When I talk to her, she never lets me slide on anything. She's an LP in my fund, and has, as I was coming together with Black Venture Institute, her and New Lily really helped me think through what to do there, as well as Sue Twigo. So I feel really grateful to have those types of folks that have been doing it for a long time, helping me sort of think through what I'm doing. So I'm grateful for that. And Melissa.
Yeah, and I'm going to give a shout out to someone you guys haven't met or know. Her name is Rumi Morales. She ran the CME Ventures in Chicago. But the reason why I'm shouting her out is because she met me when I was at Goldman Sachs. I wanted to get out and get into venture, and she was one of the few people that took my meeting, my call, and she went above and beyond. I had 0 venture capital experience, and she went above and beyond and made a ton of introductions. She got me introduced to my first job. And then she stayed around, mentored me throughout the entire process, mentored me through launching my own fund. And she's always been someone that I can go to and be super honest with. And I bring her up because there's been so many people in my life, men and women of all different races, of all different backgrounds, that have just taken me under their wing. Nothing asked. I had nothing to give at the time, and they just brought me up and they fought for me. And I want to give a shout out to everyone. I think all of us have had that. And so I think all of us try to do that for others. But Rumi has a special place in my heart. So thank you, Rumi.
That's amazing. Well, I just want to say thank you to each of you on the panel today. Not only have we had a really amazing, far-ranging, authentic discussion, but you've also just been incredible about answering all of the open questions in the Q&A that we couldn't quite get to. For all of you who joined us today, it has been a real pleasure being with you, and I really appreciate all of the questions that you had. And of course, to Denyse and our hosts today, Frank Rimmerman, really appreciate the opportunity and the community that y'all are building here.
Yes, thank you so much, Melissa, also for leading such an amazing conversation. And to all the panelists, wow. There's a lot to unpack here, and really still a lot of work to be done. And I want to thank you so much for sharing your time and your expertise. And thank you to all of our participants who joined us today, and of course our partners at Frank Rimmerman. So everyone, have a wonderful rest of your day, and hope to see you all soon. So thank you so much.